Every major war didn't just redraw borders. It rewrote the rules of money. While soldiers fought on battlefields, another war was being fought quietly inside banks, treasuries, and ledgers. This is how wars shaped global banking. When we think of war, we imagine armies, weapons, and destruction. But behind every war lies a financial engine. No war has ever been fought without money. And no banking system has ever remained unchanged after war. In fact, modern banking as we know it exists largely because of war. Long before tanks and missiles, wars were expensive. Kings needed gold to pay soldiers, build ships, and supply armies. But medieval rulers didn't have income taxes, central banks, or bond markets. When war came, they faced a brutal question: where does the money come from? The earliest answer was simple: borrow. During medieval wars, rulers turned to merchants and moneylenders. Italian banking families financed crusades and dynastic wars. In return, they received privileges, interest, and political influence. War turned bankers into power brokers. But borrowing had consequences. If a king lost a war or refused repayment, banks collapsed. Entire financial empires disappeared overnight. This forced bankers to innovate, spreading risk, demanding guarantees, and working with governments instead of against them. War made banking smarter. One of the biggest breakthroughs came from war logistics. Armies needed money far from home. Carrying gold across borders was dangerous. To solve this, bankers developed letters of credit, allowing funds to be accessed in foreign cities. This single innovation revolutionized finance and trade. War forced money to move faster, safer, and smarter. By the 1600s, wars had grown larger and more expensive. European powers were fighting global conflicts. Naval fleets, overseas colonies, and standing armies drained treasuries. Simple borrowing was no longer enough. This is when governments invented a radical idea: public debt. Instead of borrowing privately, states sold bonds to citizens and investors. People funded wars in exchange for interest and future repayment. This turned war into a shared financial project. The Netherlands perfected this system. During wars with Spain, the Dutch issued government bonds backed by reliable tax systems. Investors trusted the state. As a result, the Netherlands could borrow cheaply and fight longer wars. Banking and war became inseparable. Then came central banks. The Bank of England was founded in 1694 not to help citizens, but to finance war against France. In exchange for lending money to the government, the bank gained authority to issue notes and manage national debt. This model spread globally. Wars demanded stability. Stability demanded centralized control of money. Without wars, central banks may never have existed. Fast forward to the 19th century. The Napoleonic Wars reshaped Europe's financial system. Governments standardized currencies, strengthened banking laws, and coordinated international payments. War forced financial modernization. But the real transformation came with World War I. For the first time, entire national economies were mobilized for war. Governments abandoned gold standards, printed money, and borrowed at unprecedented levels. Inflation exploded. Banking systems were stretched to the limit. After the war, the world faced chaos. Currencies collapsed. Debts were unpayable. Banks failed. To prevent total collapse, new financial institutions were created. Central banks gained more power. International cooperation became necessary. Then came World War II, the most expensive war in human history. To fund it, Governments perfected modern banking tools, war bonds, mass taxation, deficit spending, and coordinated monetary policy. Banks became partners of the state. When the war ended, the financial world was rebuilt. The Bretton Woods system created the IMF and World Bank, institutions designed to prevent future financial chaos caused by war. The US dollar became the world's reserve currency. Global banking entered a new era. But war didn't disappear. It evolved. The Cold War reshaped banking quietly. Defense spending fueled industrial growth. Financial markets expanded. Banks became global. Capital moved across borders faster than ever. Modern conflicts continued shaping finance. Wars in the Middle East linked banking to oil markets. Sanctions turned banks into political weapons. SWIFT became as powerful as missiles. In today's world, war is fought economically. Freezing assets, blocking payments, manipulating currencies. These are modern battlefield tactics. Banks are no longer neutral institutions. They are strategic tools. Every war leaves financial scars. Debt increases, inflation rises, banking regulations tighten. New systems emerge. And after every conflict, the financial world is never the same. This leads to an uncomfortable truth. Banking does not just support peace, it evolves through conflict. Wars accelerate innovation. They force governments to cooperate with banks. They create new financial instruments. They centralize power, but they also expose weaknesses. Overborrowing leads to crises. Inflation erodes trust. Financial inequality grows. History repeats itself. Understanding how wars shaped global banking helps us understand today's world. Why governments borrow trillions. Why central banks exist. Why money is political. Why finance is global. It is the product of centuries of conflict. And as long as wars continue, banking will continue to evolve. If you want to understand money, you must understand war. And if you understand war, you'll understand why banking rules the modern world.